All right, traders, welcome to Charts and Coffee. Hope everyone is doing great. Happy Tuesday. We have a lot going on this Tuesday morning, so I'm just going to give you a sneak peek into just a bit of the notes that I'll be using as we present in the rooms today. So, first of all, what is typically the August mood, right? That's probably one thing we want to think about as we kick off this month of August. So there are tendencies, right? There are things that equity markets, commodities, currencies tend to do. Remember, anytime we're looking at a seasonals were really first and still most accurately applied to things that are weather dependent, that are quite literally seasonal. We are talking about things that are planted and harvested and grown and transported and stored, right? And because weather patterns tend to be somewhat rhythmic, so too are seasonals. Now, currencies, treasuries, indices, they are not necessarily that seasonal because the monetary policy is not something that shifts from spring to summer to fall to winter, right? But there are certain things we can look at when we step way back and look maybe 25 years or look 15 years or even 10 years. Now, I tend to stick, especially with indices, to the last 10 years because modern monetary theory has changed the way in which indices tend to move because of, well, printing and, right, extremely accommodative monetary policy, not just from the US central bank, from G7 central banks. So if I look back the last 10 years, this would take me back to 2013. If I look back the last, 15 years, so now I'm going back to about 2012, we can see that, and I hope at this point, sell in May and go away is something that no one will ever utter again because it's just not true. It's just, if we think this is a seasonal, by the way, we dedicated an entire section to the Top Tier Outlook newsletter, where I talked about the whole saying is it's all really about money moving to horse country out in the UK, out in London during summer because it's just too darn hot in the city, and the rhythm for sort of this apathy for summer came from horse betting season, right? And when the races were over, everybody came back to the city and got right back to work. So anyway, you can see the last 10 and 15 years, typically it's very much, if anything, a buy in May, right? Now, August is a different animal, right? So if we now change our look back to simply August to September, right? Let's take a look at this. And I'm going to highlight this one. This is a very choppy month. The last 15 years, chop suey. The last 10 years, chop suey. The last 5, little bit more bullish, right? Little bit more bullish. And think about what the last 5 years would have discounted, 2018 to 2023. This would have had 2019, 2020, 2021, and 2022. And much of what we've seen through those past couple of years has been monetary policy. It's been a little bit more accommodative, right? So you can take a look, but just historically, it's a tricky month, right? It's a month where if anyone's going to take a vacation, this is the month they're going to do it. And that's why we sometimes see lower volume, definitely the last half of this month. So not an easy month. And again, this is the SPY seasonal. We don't confuse seasonal tendencies with trades. But if the technicals line up with the tendencies, then you got something that could be pretty darn powerful. All right. So that's just a little bit to kick off the morning. And then if you haven't already, checked out the economic calendar. Come 10 a.m., we get all the hot zones, right? We get ISM manufacturing, PMI, which would be a little bit more of an inflation type data release. JOLTS, more on the job side, of course, job openings. And then we have FOMC member Goolsbee also speaking. So lots that's going to happen right at the top of the hour. All right, gang. So let's jump into the questions. We'll take a look at the charts via, you know what, let's use some trading view charts this morning. I do love these charts. So let's jump into the trading view charts. And I know I have them here somewhere. There we go. And we'll take a look at those here this morning as we take the questions. And first up, so we're broadcasting here. My Simpler Essentials folks, if you have any questions, feel free to type them in. And of course, everyone on the YouTubes, got multiple we're broadcasting to, Twitter, and as well as Facebook. All right, let's see what we've got here. First up on the questions. Are there two non-farm payroll reports this week, Wednesday and Friday? What are the differences? Oh, hey, Jack. So not really. I mean, non-farm payroll is singularly that data that we get. Here we go. Let me show you what we're talking about. Non-farm payroll on Friday. Let's open that up. Non-farm. You'll see that's the data that we get from the Bureau of Labor Statistics, the BLS. That is the number, right? So there are instances where we have certain numbers that are both sort of private numbers, and then we have numbers that are coming from different government agencies. API and crude oil inventories would be a great example, where you have the American Petroleum Institute number that comes out today after the close, which is the private inventory number. And then tomorrow, Wednesday at 10:30, we get the EIA, which is the agency number. So sometimes there are private and public, and the main one is Friday. However, the other one you're talking about on Wednesday is the ADP. So this is from Automatic Data Processing, right? It's a company, and this is their estimated change of the number of employed people during the previous month, right? As opposed to the Bureau of Labor Statistics release. So this is a little bit of a heads up. I really do not think much of this number in terms of foreshadowing what we're going to get on Friday. However, this can, along with other data points, start to give traders and investors a little bit of understanding of what could be expected. And more so than that, is it expected to be above 203,000 or below 203,000? Because that's the estimate right now. So when we talk about whisper numbers for earnings, we have whisper numbers for all sorts of data releases. We have numbers that we see the consensus or the expected is, but then as we get closer and closer and closer to the hot zone, which is a scheduled high impact event, doesn't matter if it's earnings, doesn't matter if it's data, as we get closer and closer, there will be alternate expectations, and to a certain degree, right? Market participants will discount, price in that potential reality that might be different, higher or lower, sometimes substantially so, compared to that consensus of 203. So two different numbers. The main one is definitely Friday. Okay. All right. Question from our Essentials room from John, who asked, could I explain how the Bank of Japan affected our markets Thursday? So there was a release from the BOJ where they decided to tweak with rates. Now remember, this has been a decades-long policy where the Bank of Japan, BOJ, buys Japanese government bonds, JGBs. So if you ever hear, oh my gosh, the BOJ is changing their policy on JGBs, it almost sounds like secret code, right? But what that is the degree to which they continue to buy bonds. And that's been what they've been doing for a very long time to keep rates in check. So the first place I'll go look at is dollar yen, right? The dollar continues to gain on the yen. Bank of Japan monetary policy is designed to keep the yen weak, right? And every now and then when the yen gets too strong, some of you might remember this from the early 2000s, we'd get sudden interventions from the BOJ and the yen would just, go crazy for a brief period of time. If the yen gets too strong, they will act, right? That's another thing too. So ultimately, when they're tweaking with rates, and the question is, does it affect our rates here? I would say that for the most part, right, John, here's what I would look at. Take a look at the range that we've been in for some time. So you're talking about Thursday's action. We did see a dramatic amount of movement, but you know what I always ask myself, John, is did we go anywhere new? If the BOJ, and very likely created some of the volatility of that candle, which is a sizable candle, um, did it take us anywhere new? Did it reveal any new price levels? And it didn't. So this is really just a lot of volatility. And you could see this candle is not alone in its unusual size. As I like to call them, a candle of unusual size. Yes, absolute shout out to the Princess Bride and the rodents of unusual size. So one, look at this. This is another large one, another large one, another one. Right now I sound like DJ Khaled. Another one. Right. So now we have, from time to time within the range that we've been stuck in between June, July, and now into August, we do get those unusual candles, right? So I can't say the Bank of Japan did anything new to the long bond, right? To the ZB or the TLT. We're just seeing volatility as we have for the last 2 months within this very established range. I mean, look at this range that we've been seeing here, right? So that's the way I look at it. So yes, it might have done something, but then before I want to panic or think there's a setup there, if anything, they might that action may be moving us closer to the 123 handle on the ZB, which could give us potentially a buying opportunity, right? So that's the way I kind of separate. Did they do anything to? Did they do anything helpful to me, to us, John, as a trader? All right, thank you for the question. Good stuff. All right, next up, follow-up question from John on YouTube. All right, so moving on from John L to John F. Asks TLT continues. Oh, hang on one second. Change my. There we go. TLT continues. Oh, did I lose you there? Where did I lose that? There it is. Continues its downtrend, downward trek. What does that say for the broader market? So this is still very much chop to me, John. We've been in chop since really early to mid-June. And as long as we're in chop, moving down towards Darvis support, and in the case of what 123 would basically translate to on TLT would be about the 99 to 98.80 area. So you can see the Darvis levels there, which we're just at, if not testing. And I would ask myself whether or not we can get perhaps an oversold stochastic, which arguably we do have, and a potential long position that I can take, maybe long calls, maybe long TLT shares themselves. But generally speaking, this is interesting because, John, if I'm going to see some sort of pause to potential cut scenario priced into the long bond, they have to be moving higher because higher ZB, higher TLT is actually reflecting lower yields, right? As we see TLT move lower, ZB move lower, albeit in an established choppy range, as we talked about before, it is slightly higher yields. So this is an interesting spot we're in where bonds are not front running the possibility of, say, late Q1 2024 or early-ish or mid Q2 2024 rate cuts, because that's what the target rate probabilities of the Fed Fund futures contract is saying right now, that's when we could see a rate cut. I'm not worried about the cut. We want to make sure that we're not going to get another hike this year, that we're going to go into that pause. And data like Friday's PCE and data like this coming Friday's non-farm, if jobs are steady but not too strong, and inflation is steady and not too strong, the Federal Reserve probably doesn't think that they can or should hike again, because there is a pesky quarter point hike that's still not off the charts, right? It's still in there within the discounting for either November or December's meetings. I mean, we're going way out into 2024, but that's the way that's shaping up. So why do I mention that? ZB is not responding to that yet. TLT is not responding. How would it respond? Move higher. It would have to move higher to reflect that. So I hope that makes sense. Thank you both, the Johns. Great question on the bonds. All right. So thank you, John L. John F. Moving on to Raphael. X for a swing. So if we're taking a look at U.S. Steel, couple things, Rafael. First of all, I have been keeping an eye on XME. Now, I'll tell you, Rafael, we've been focused a little bit more on in the Sector Secrets Mastery Room. We've been focused a little bit more on the FCX, right? Because you can see here, FCX has all the hallmarks of the kind of uptrend that I like to be in. Uh, Above the 200 propulsion, which are the white dots on this chart, green multi-trend, which is the sort of traffic light simple color-coded assessment of, are we in a neutral yellow environment? Are we in a green bullish environment, or are we in a red bearish environment, right? So I like the idea of different names at XME. X would be one of them, Rafael, but I would say FCX is still where I want to focus. And a lot of that's going to benefit from what has been a pretty decent, although not yet steady surge in copper, right? So X is fine. It's starting to show signs that we could look for a buy, but not as steady as FCX, right? And if these kinds of nuances are something that are new to the way that you're looking at the market, gang, tomorrow, this is coming up in just tomorrow evening, tomorrow at 8, simplertrading.com/opportunity. I'm going to walk through the trades that we've been taking in the mastery. We have an unbelievable trial package that's going to start on, well, I guess technically tomorrow, but really the 3rd, we start the trial for the Sector Secrets Mastery. You get 30 days to DPMRs, 30 days to HPMRs. You get my layout that we use in the Sector Secrets Mastery, as well as all sorts of other goodies. And this is the trial package that we're going to be talking about tomorrow. But more so than that, what are we doing in the room, right? What kind of trades are we taking? Day trading, futures trading, stock trading, ETF, options, long-term, D, all of the above. So check it out tomorrow. We'll be walking through that. This is one of those trades, Rafael. This has been a monster trade for us because I love where you're looking, right? So if you're pointed in the right direction, which you are, now it's a matter of some discernment, that watch list building, right? So why FCX over X? Better structure for longer. Yeah. So I hope that makes sense. And that's a great question, Rafael. Definitely a sector and a corner of the market that I want to continue to try and take advantage of. All right. So next up, and how am I doing on time? All right. Next up, and probably the last question for today, will be Jim, who asks on TradingView, yes, which I am on right now. How many indicators are involved to run my system, trying to figure out which level to sign up for? So Jim, here's what I'd say. I use the I think it's called the Pro. Hang on, I'll tell you for sure. I believe I use the Pro. Premium. There you go. I use the Premium. And not that that's what you have to use for the service, but I use the Premium. And what I would say is when you are ready, and by the way, I love the question because one of the things that we do have for the trial and even in the mastery is all the indicators are available on Thinkorswim, which is by far the most popular platform. I mean, by a country mile here at Simpler. But I would like to think a lot more traders are using TradingView. So I love the question, Jim. So I would start with either the middle, which I think is Pro or Premium. And then remember, you can try the whole thing for a month because TradingView does have a free trial. And then about 3/4 through your trial, they'll offer you 40% off the subscription, right? That's usually what they've done in the past. I don't think that's changed. So I would try out the top, right? And then to see if you use all the features. And if you don't, when it's time to use that discount and subscribe, then you can go down to the next level or up. But I would try the Premium to begin with, but you would be fine with the Pro or the Premium. I think we have members in the Mastery that use either. All right, good stuff. All right, gang, as always, thank you so much. I will see you tomorrow, same time, same station. If you haven't registered already, simplertrading.com/opportunity. I'll see you tomorrow at 8 p.m. All right, be good to each other, gang.